Aloha and welcome. Thanks for stopping by. I'm Digital Micro. You're on the Digital Micro Trading Journal channel. Day trading for an ROI payout, no trade recommendations. It's just my trade journal, and we're going to talk about the weekend prep for Monday, 3/27/23, continuing education of a speculator. That would be me. How last Friday's M2K low of the year bounced. Really key moment in time. We hit a 2023 year-to-date low, and I want to analyze it because I learned a lot this last week, and I'm going to be implementing it every single time I see something pronounced like an open range gap. Let's get to it. So I want to outline basically the inside look, how last Friday's 2023 low of the year rebalanced an imbalance gap. Before I go to the charts, keep in mind, this is what they did. The seek and destroy algo on a Friday attacked traders' weakest vulnerabilities at the most vulnerable time of the week, day, hour. And when is that? That is late Friday afternoon, and maybe starting right at lunch. So I'm going to talk about that. So again, institutional algos, AI trading bots, they're relentless. And Friday they opened with a 25 open range gap in balance, okay? 25 handles. And then they closed on the tick on a 3-day equilibrium point from the FOMC day. So let's get to the charts. 24-hour chart. Let's do the recap for the week because this FOMC was the large candle. It broke on through the new week open gap of how we started the week here. You can see this coral colored March 20th. And then Thursday, the day after, we did have this candle wick close to the median equilibrium point of the FOMC down candle. Friday opens. I had not been using open range gaps. And what that is basically the close of the prior day, Thursday, the closing print, and then that difference between Friday's RTH open. So here's the open, about 16.4, and then the close of last Thursday, which was 41.6. It's basically a 25 handle open range gap. A journal moment where I'm unleashing a new weapon, the open range gap, and especially when I see big gaps like 25 handles. Now, it took the whole session for it to reclaim, and where we ended was the 3-day equilibrium point from the high of the FOMC to the low, and that is a year-to-date 2023 M2K low. That high and that low, the mid is right here, and look where we close. The closing print right there, literally just about at the tick. I want to go to a couple other charts just to frame this where I could have gotten long and done a better job of managing this, but this is again a key journal moment because I'm implementing, not just learning, but taking action and anticipating a lot more open range gaps above and below are going to happen for 2023. So let's go to the 60-minute and then the 15. 60-minute chart. We have an algo on the left top here that's just above the new week open gap, signaling this bar here. This bar represents the close, this green bar with the wick into the new week open gap. And then we go into a lot of Asia Globex, and you can see here this Asia Globex is not doing a whole lot, and there's no signs that we're going to have a big gap. But then what happens is right on the Europe pivot, we get another sell algo with a 94 delta. And after that, it's just a sharp knife through butter all the way down to the year-to-date low. So let's go to that chart right now. So if I had to do it over, I want to train myself to recognize if I would take this trade if this pattern happened again. And what I'm looking at is these arrows here where we're right in, we're not even at the lunch hour, we're still at the AM part, and we had this sharp down candle, and we go back down, and we're 45 minutes from the lunch, and then we go half hour, 15 minutes, and then the lunch candle. And what I'm looking here is this yellow box within the gap. And again, this is the equilibrium point of the total gap, 29.1. And you see this fair value gap form just below the equilibrium. We go up to this auto signal, this red line, 33.8, and then we come back down into consequent encroachment into the fair value gap where this red arrow is pointing. That's the signal. That's the buy signal. The issue, though, is how late in the day this is. And my problem with it is the time is right inside of the lunch hour. So, no, I wouldn't have taken this trade because it's a Friday. I don't like trading afternoons, but the signal is clear. This thing is going to go up, and it looks like it's going to rebalance the imbalance of this whole gap in the afternoon. So I'm just going to really remember this chart, this time, this signal and pattern, and tattoo it, because I am learning about the fair value gap models and putting them into context after we've had sell side liquidity lower, which we did. We hit this year low, and then here we are in the lunch hour, and then we're correcting that gap, and look where we close. We go all the way and close above the new week open gap. So that kind of wraps this. Learned a lot this week, and again, a new tool in the bag is the open range gap. If you're not using it, might be something you want to look at. So I'm definitely going to be utilizing it as another price action tool. Take care, enjoy your weekend, and looking forward to the Monday Globex Open. Aloha.